Welcome to Investing Uncensored. I'm your host, Stewart. And you all know I love bringing on people that tell us how to make money, but you also know that I'm really big on mindset and mental health because of various reasons on my personal life and what you know from bringing people on the podcast of how important it is. So I'm bringing a special guest for us today who's going to talk about how he transitioned from bringing in money and dealing with investors and entrepreneurship into how mental health has played a huge role in something that he's trying to fix for entrepreneurs and people in general. So I'm bringing on Jay Tobey. Jay Tobey is the founder of North Star Financial and North Star Recovery and Wellness, and he's going to tell us why it's important and why he transitioned from being an entrepreneur to want to help people in the mental health space. So Jay, how are you doing?
I'm doing so well, Andre. Thank you so much for having me.
I'm glad to have you on because, on my personal channel, I talk about mindset so much and how being an entrepreneur is such a struggle. And I don't think people really know how it takes a toll on your mental health being an entrepreneur or an investor. So I'm happy that you wanted to, come on the show and kind of like bridge the gap between those two.
Yeah, as many of your listeners know, being an entrepreneur is probably one of the hardest things someone could do.
For sure. Like I can't even just being a peak performer, like athletes are trying to perform at a high level, it just takes a toll on you mentally. So Trent, tell us how you transition out of being, in the entrepreneur space and wanting to help people that might have mental health struggles or that struggle with being an entrepreneur.
Yeah, so in 2019, I was able to invest in a mental health substance abuse facility up in northern Utah.
Mm-hmm.
And I was always looking for kind of philanthropic, for good opportunities. Just the other day, I was in LA and I was listening to Meta World Peace talk about how he could, after he transitioned from from basketball,
Mm-hmm.
he really wanted to figure out how to bridge the gap between cash flow and philanthropic, ventures.
Mm-hmm.
And so as he was talking about that, I just thought more and more, I was very happy that I picked the path that I did about a few years ago. And so what it is we're really working on bringing a lot of resources into the mental health, substance abuse industry. When we say resources, meaning a lot of capital, a lot of support. There is so much, as many of your viewers know, and many people know through social media, so many people are talking about mental health. They're talking about, substance abuse help or addiction recovery help.
Mm-hmm.
And I just really feel blessed that we've hit the right wave.
Mm-hmm.
That as we talk about this, it's something that's really resonating with a lot of people.
It's funny because like a lot of people don't like to talk about, maybe up until maybe before 2020 or a little after, it was frowned upon for people to talk about mental health issues or depression, or people were just looked at so weird if you brought it up. So there has been a huge shift in talking about mental health, publicly. Like athletes have come out about it. I think, and I've played ball at Meta a bunch of times at Equinox in different leagues, and he's a super nice guy. Like people might know him from his basketball antics back when he was playing, but in person, he's a super nice person. So he talks about mental health a lot. Even back then, I think he just wants to bridge the gap, kind of like you're doing, and let people know it's okay. And I talk about my depression struggle that I had before when I got into entrepreneurship too. So some people are just not, I think people are more open to talking about it now because of what happened after the pandemic and different struggles. So how did you transition from being on the investment side or raising capital for that to want to start raising capital for something like we're talking about right now?
Yeah, just like you said, if we were talking about this in 2008, I talk with investors every day. Our group talks with investors every day, and we say, man, if we were talking about this in 2008, people would just sweep it under the rug.
Correct.
But how I really transitioned was I saw massive gaps in this industry. I've never personally gone through addiction and recovery. I would say 95% of that industry is people that have dealt with that personally, lost family members. I've lost friends and families to suicide. And so it's touched so many people.
Mm,
And I just saw massive gaps within that industry.
mm.
And so I said, let's take my background of helping bring investors together and real estate, and let's just go really help that industry.
Mm. So then with, dealing with investors or just even entrepreneurship. So there's highs and lows, there's ups and downs in entrepreneurship, and it's easy to slip into a depression when you're trying to build a business, or it's easy to do that when you're becoming a real estate investor and the deal doesn't go the way you want it to go. What are you seeing with your experience in entrepreneurship or dealing with these investors that kind of made you want to dive into this? I know you just said you had some personal experiences, but were those people investors or just friends and family, or what kind of got you to this point?
Yeah, close friends and families.
Got it. So then, are you taking the money that you raised before, or the same investors that you raised money from before for real estate? Are you now getting that capital to build out the North Star Wellness, or how's your, what's going on there?
Good question, Andre. I listened to one of your episodes where you're talking about accredited and unaccredited.
Mm-hmm.
So we've worked with the SEC, and we have one vehicle for accredited, bigger check sizes. It's touched everyone. Mm-hmm. And we actually worked with the SEC and have one vehicle for unaccredited. Mm-hmm. And so we did that just to open up the ability that everyone can, if you're going to, donate to this space, might as well invest and get a return back, so that you can use that cash flow and use that capital coming back to use as your charitable donations.
So are you finding that the investors that you're working with now, are they concerned about the mental health? Because in my opinion, mental health in the US is on a serious decline. And I talk to one of my friends about it, Lance, all the time, about the fact that the cost of living in the US has gone up so much. And that's requiring two people to work in the household. So there's less time with the kids, or for them to just focus on the home in general. And so sometimes the kids are growing up and they're, getting on drugs, or they're just being influenced by outside sources because they don't have the support. So are the investors that you're bringing in, they're accredited or non-accredited, are they seeing a huge shift, and that's why they're behind what you're trying to do?
Yeah, I love what you said. Just this space, as anyone looks out, the mental health of the nation is going way the wrong way.
Man.
And there's probably there's a ton of myriad of factors. We're just trying to say, hey, we're providing more services to individuals.
Got it.
A good example is we have stories on stories on stories of people that check into an ER. They're trying, their family members trying to commit suicide. It takes 3 to 4 to 6 months for them to get into a long-term care facility.
Crazy.
And so that's where we're trying to add a lot of services to say, after you get stabilized at a ER or anywhere like that, there's more services available that you can tap into.
Got it. So with North Star Recovery and Wellness, tell us what that's about, right? So you just mentioned, them giving you capital for that. What do you do there? Is that like a facility that people come to? What's going on?
Yeah, we're building a large geographical network of facilities, and we're trying to make an integrated model where we can take you from like off the street or coming from an ER and work with you for 3, 4, 5 years. Whatever works best for the patient. We'll have supportive housing, we have outpatient, we have residential. So whatever a client needs in their journey, we're really trying to support them. Because oftentimes, you've had an issue for 10 years. Insurance is going to tell you, hey, you can only do this service for 30, 45 days. And then you got to be shipped off to another company. We're trying to say, hey, as you move to those next services, we can really help build that model around that client.
Got it. One of the big things that I've done with my personal show on my personal show, one of the big things that I've done with my personal channel on YouTube, I've gotten into behavioral psychology. Integrative psychology is something that I taking a liking to in the last 2.5 years, just because I saw what struggles that I had prior to becoming an entrepreneur, and they became exasperated with becoming an entrepreneur. So I'm just like, if I had these problems before and they just get compounded with becoming an entrepreneur, I'm not the only person that have this. And so, that's one of the reasons why I did, become a master practitioner of integrative psychology, because I understand that most of these things that people want to do, they're in their own way. And it's not because of, they're not interested in becoming entrepreneurs, or they're not interested in becoming investors. It's just certain behaviors that they have from their upbringing that just kind of just set them on the wrong path. So I know one of the big focuses that you all have is behavioral, I'm guessing behavioral changes that you're looking for with the people that come through North Star. Is that correct?
That is correct. And I think it's interesting you point out, sometimes entrepreneurs, business owners are more in touch with their mental health.
Correct.
Because you're dealing with it every day.
Mm-hmm.
And sometimes people that are just clocking in, and working in a big corporate setting, they have maybe not as much time, because they go to work, they come home, they've got family responsibilities. Sometimes entrepreneurs are working on their business 24/7. All day, all the time. Right. And so I found oftentimes that other owners or other people that have taken more of an entrepreneurial route are more in touch with that behavioral psychology. They say, why am I ticking? Why am I thinking this way? Mm-hmm. I'm really putting a lot of emphasis on these certain aspects. And are they helping me win, mm-hmm. or are they not helping me win?
Correct.
And sometimes, people that, unless your corporate is sending you to training, is maybe not as in touch with that part of their mental psychology. So it slips, mm-hmm. until they really hit a big wall.
Correct. Yeah.
I've had a family member or two that, have hit those walls, and you're just like, holy cow.
And it's funny you said that, because that's one of the things that for me, and I talked about this on a recent episode, where I was taking off work because I was struggling with, trying to work 65 hours a week or 70 hours a week and then take care of my son at the same time. So I ended up going through a depression, because I took a job at a specific bank to make 6 figures, and me chasing the money, which most people stay at a job too long because maybe they're comfortable, or maybe they've made a lot of money and they don't want to leave. And so, me leaving and progressing out of corporate America, I'm thinking it was going to be a lot more easy for me as an entrepreneur.
And it was rainbows.
10 times worse. So now I have to work 24 hours a day, still take care of my kid, and then deal with like clients or customers. And now I got to deal with their problems. So now I'm a psychologist to my clients. So you're just getting hit from 1,000 different angles. And that's what I think. There's a misconception about entrepreneurship, that people think that's just the dream. It's the dream if you can get to that point, but you have to have behavioral flexibility, which a lot of times people, if you don't have those tools, you're not going to be able to navigate everything that I just said and build a business. So then you might go ahead.
I had an investor one time tell me he had sold his company for, a boatload of money. And he said, if you're building a business, fires happen every day.
Correct.
And one day someone will come along and say, your fires are worth a lot and I want to take them on. And he's just like, okay, sure, take these fires off my hands. And sometimes I feel like we are hopefully coasting to a spot where you just feel like you're like, oh, the company's in a good spot, there's an exit, there's an end to this. And he says, no, it never feels like that, dude. It feels like there's always some issue.
I'm glad you said that. And I talk about reframes. Reframes are a huge thing in psychology for people to, if you're in a situation, if you look at it differently, it allows you to move past it and not be bitter or not hold on to it so you can grow from it. It's funny you say that, because I'm just like, there's always something. As soon as you think that your business is going smooth, it's not. It's just, you're just learning how to manage that one thing a lot easier, or you giving it to somebody else to manage. So I like that. I'm going to use that as a reframe to say someone wants to buy these fires, because man, almost every day there's always a fire, and you're not thinking that the people that are buying it from you are acquiring those fires. You're just thinking, I'm selling my company, and you're like,
They
thank
want the
God.
good
But
aspects.
correct. Yeah,
And
yeah,
yes, they
yeah.
do. But they know the good comes with
That, right. Yeah, yeah. And they might have a better solution or a bigger team that can help put out those fires versus you having like 5 or 6, and they might have put out those fires 1,000 times. So it might not be anything to them, but for you, it's like the end of the world. You know what I mean?
it might be the first time you've ever seen that
Correct.
fire.
Yeah.
And they're like, oh, we've dealt with that 100 years ago.
Like Jimmy's a specialist at that, right? Versus you like, oh my God, what do I do? So I
So
like
what got
that. So that's a
you, I
good
mean,
reframe for any
what has helped you
entrepreneur
in
out
your,
there. Go
oh,
ahead.
sorry, you go.
What were you about to say?
No, you go.
I was saying that's a good reframe for anybody out there that's an entrepreneur who's thinking like, where's the end of this? Where you feel like there's no light at the end of the tunnel because there's every day there's something. This employee's doing this, so you got to hire this person. But I like that. But what were you about to say?
No, and I just really wanted to make sure those individuals that were in corporate America, they also feel supported in this conversation, because oftentimes entrepreneurs talk about how hard it is, but man, corporate America, I would say there's a reason entrepreneurs maybe step out of that lane,
Yeah.
because it is
No, I
just
mean,
as
corporate
hard.
America, again, like that goes back to your point. Even though I was working in banking, that's one of the places where I did hit the depression because I was working so many hours a week. And then when you're understaffed, they're not going to go hire someone right away. I mean, I was doing a job of 4 people, right? And it was just myself. And then the other person that was there, they took a leave of absence because they were feeling it too. So then here I am doing a job of 3 people. And that's kind of what happens in corporate America. If you can do it and they're putting the pressure on you to get it done, they can care less if you're doing a job of 4 people. You've been doing it for 6 months. I guess you can continue to keep doing it. So correct. There's downsides of both.
Yeah, and as you talk about those things, just the pressure, I think there's an underlying pressure of America that's just kind of building and building and building. It has for years, and we're just starting to see the statistics. Talking about in Utah, where we're based, there was just one medical hospital group. They had, I think, 30 to 40,000 people check into their ERs for mental health or substance abuse just last year.
So with you starting, North Star, what kind of data do you get, or what kind of data do you see that we're talking about it now, but I've just noticed from traveling, I don't know if you leave the country, anytime I leave the country and come back, I'm just like, Jesus, we're getting more and more like a third world country, because I spent a lot of time in Colombia or Latin America, and they're becoming a middle class, but you just see the inefficiencies that you see there are now starting to come here, and they're getting better there, but they're just getting worse here. So what kind of stats do you see that come across that are showing you that the U.S. is heading in a wrong direction?
Yeah, let me pull. I think these are some interesting stats you guys will think.
Because I'm always talking to my friends who I've traveled with, and I'm like, man, the U.S. is in trouble, And so that's kind of one of the reasons why you're pulling it up. That's just what I want to talk about real fast. Like, that's why on my personal channel, I'm so heavy right now for the last, 30 to 40 videos talking about different things of where people can just fix their mental health, especially entrepreneurs or anybody in general. But I just know that people want to do what we're doing. Maybe not being a business owner, but they want to invest. They want to do real estate. They want to do things like that. So
that's what I started to see when I was in the investing world, and I still am. Don't get me wrong. North Star Recovery or North Star Financial is really here to bring resources to bear for North Star Recovery and Wellness. And so it's a financial group that is really there to help support behavioral health. But some crazy statistics are like 1 in 6 people have a substance abuse disorder. 1 in 6 people have a substance abuse disorder. Nearly 25 of adults struggling with mental health illness at some point, and only 13% of those individuals will receive treatment.
I can see that. Right. And a lot of it just because, like you talked about earlier, the pressures of relationships if you don't have money, right? And then the pressures of like taking care of a household when you have kids. And then even if you are in corporate America, the cost of living is going up. And it's not like you're going to get a 20% raise, right? So all of these pressures put on you, yeah, I mean, it's just so hard. And then a lot of times if you're a man, you're not thinking about, I'm going to go check myself in or anything like that, right? You're like, no, I'm a man, I'm going to deal with this. And, I don't know if this is going around, but this could be a narrative online where a lot of times guys might feel like they can't talk to their significant other about that kind of stuff. So then it just piles up and it piles up. You know what I mean? So, but I mean, again, men aren't out here, crying on their friend's shoulder. They're just dealing with it. And women have their struggles too. You know what I mean?
And on the investing side, what was interesting is, I think just the other week, I had an employee send me, Brandon Turner posted about his next 3 or 4 asset classes, like asset classes in real estate he's watching. As we all know, Brandon Turner was like an amazing podcast host for Bigger Pockets.
Correct.
And sober living, which is a big vertical that we do, which is just supportive housing for those going through mental health or substance abuse. And he said it was one of his top 5 asset classes that he's going to be watching over the next few years.
100%. I mean, since I'm on the lending side, so many people reach out all the time about doing halfway houses or sober living facilities because, for one, you're getting money from the government, right? So it's going to be guaranteed cash flow. But not only that, you can get a property and turn it, cash out, refinance it, and turn it to a sober living and make $6,000 to $10,000 a month. You know what I mean? So but like you just mentioned, it's skyrocketing. If you're in Arizona, if you're in Florida, or if you're in certain markets, obviously, if you're going to get into real estate, that's where the trend is. So instead of you getting a single tenant, just do a sober living facility. And most of those people are okay with sharing a room. So now you're getting $800 per person. You got a 4-bedroom house. Yeah. And it's guaranteed income that you're getting from the government. So I can understand why he's targeting that from 3 different angles: cash flow, cash out refinance, asset growth. But then you also have the rise in mental health issues. You know what I mean?
You heard it here on Investing Uncensored, because by the time Bigger Pockets was talking about RV parks and storage, people had missed the boat.
Correct.
We look at this market all day, every day. Yep. There is still huge opportunities.
Huge opportunity. Yep. And so I think I did a podcast on this maybe last year where I talked about this same thing, but I didn't dive into the details on why assisted living facilities or sober living facilities will be the go-to for the next couple of years. I don't want people to target these folks, right? But somebody's got to do it. You know what I mean? So if you're going to be an investor, why not, right? You're helping them. You're getting paid at the same time. Everybody wins. The government gives money for things like this because they don't want to do it. So why not? Why not go ahead and do it and everybody wins? So in your situation go ahead.
What we see all the time is that like a house flipper will get in trouble and they'll look at this model and they'll try to like convert their property. If you're going to get into this, like anything in real estate, be very intentional.
Correct.
I mean, you mentioned the government's in this, insurance is in this, but when there is that much oversight, there is like a lot of liability that people are taking it on. These are not just normal tenants. These are people that you need to very much protect and care and for their well-being. And so I see a lot of people, they come around to like our facilities and they'll say, hey, we've got a new facility or sober living that just popped up. Well, look, unlicensed, closed in 6 months, if not sooner, by the city. And we're just like, what happened? No one's going to say, there's so much demand in that sector that if you can do it right and really devote, the brain power of how to create that type of product for the market, you're going to really win.
Correct.
I mean, I saw that personally. We started in residential, which is like the most expensive, least profitable part of that whole ecosystem. But we were large enough we kept sending people to licensed sober living homes,
Mm,
and they would have 160 people on their wait list.
correct.
And it was just so hard to send clients that way, especially when we were real estate investors, business investors. And so that's really why we said we can go and do this big.
So then me and my friend are trying to do this in Arizona. So how do you all operate? We've reached out to like 3 or 4 facilities to try to get, once their person gets through the next phase of where they have to transition out of those facilities, they have to go somewhere, and they usually want to go somewhere for a couple months. So with your company, are you all looking to go nationwide with your program, or is it strictly right now in Utah? And how do a person, just say like myself, maybe they're in Utah and they want some people from your facility after they hit the point of where they have to transition out? How does that work for you all?
Yeah, good question. So we have groups that are trying to bring us outside of the Intermountain West right now.
Mm-hmm.
And we're really focused on kind of the Arizona, Utah, Idaho, around there. We have opportunities in LA. We really just want to make a good product, and then we just know we'll be able to scale. I mean, we've talked, I won't get into it, but we're trying to place 115 million into this market.
Okay.
And so we just really want to be intentional about what we're building, because the demand is everywhere. We can go anywhere.
Yeah.
You talk about Arizona, Phoenix, just that city is like the size of the entire market of Utah.
Correct.
And so if you can build it in Utah, you can build it in Phoenix.
Yeah.
And so how an individual like yourself would work within this system is, well, give me more of an example of what you're looking to do. Or you're looking to open a sober living home.
Exactly. So in Phoenix, we're buying houses to retrofit them out. So we're going to have a security guard. We're going to do the whole thing legit. So we're trying to get, obviously, once we do it, we want to be able to have the people in there. We need the tenants in there. So.
Okay, I get what you're saying. And so how you work with the ecosystem is there is a lot. What I've noticed in this space, people have been in this space for 30 years, doing God's work. Like we mentioned, no one was talking about this.
Nobody.
These guys were just small, and there's still a lot of small mom and pops that know every single one of their clients. They know their families. They are really deeply invested into the well-being of their client. So they really care on where they're sending them.
Correct.
And so one of the biggest things that you could do as you're prepping for this is go and visit with those local facilities. Usually they're pretty open to learning about new people trying to get into the market and trying to partner, because everyone's really looking for the best outcome for clients.
Correct.
And so if you can kind of, it's that business development role. They're not just going to send you clients because you just opened up a facility. But if you can go in beforehand and say, hey, I'm going to open one over here. What I've noticed is the government, other facilities, they'll tell you what product that they want you to build. Like we were talking to a big government entity here in Utah, and they were talking and saying, we have a huge need. If you open these 4 type of facilities, we could send you a ton of people because they are taking up space in higher care beds. We need to transition them to lower care beds.
Correct.
And so right there, we already know, okay, if we build X, Y, and Z, we have a guaranteed flow of clients coming into our, to our sober living homes or whatever the facilities may be. And so that's what I would say is, look at the markets. They might say, hey, we already have like 4 of those referral sources here. Well, good thing I know that now. Man, this, for whatever pocket of Scottsdale is oversaturated. I wouldn't have known that if I hadn't have gone and talked with those people.
Got it.
But they might say, if you open this is a huge need. And that's what I saw. From top down, I just kept talking to people in the market. And even me, I'm like, I want to open this type of facility in this county. And my team will be like, No,
No.
don't do that. It's not going to be successful. It's oversaturated already. And to me and you, not being, hugely our whole careers in this industry, we just see this huge demand
Mm-hmm.
all over the nation, and we just expect that demand will be there always.
Correct. I mean,
But in
the way
some
it's
places,
going.
yeah, in some places they actually have good coverage for certain types of services,
Mm,
and then they have abysmal coverage
mhm.
for others. So just
But you
figure
hit
out
it.
where the coverage gaps are.
You hit it on the head. I like the reason I'm choosing Phoenix because I know what's going down in Phoenix, just like you know as well. I don't know if it's because it's hot over there. I have no idea, but the demand will probably always be high there because it's a trans. I don't know. People transition from California to there to kind of transition from different places to go there. So I might have to pick your brain on that outside of this because if you're trying to expand there, obviously we should try to work together because what's needed and you're obviously funding that in that particular market. So
I would love to talk to you about that. We were just talking with a group that was trying to do something in Texas and Florida,
mhm.
and so super open to talk to others and just really describe our experience in this sector.
With your company, are you all providing? Because I went to your website, so I'm curious. Do you all provide funds for someone? Just say me, for example. Do you all provide funds to a company that's trying to open up facilities, or are you just a facility that gets these people well, and you transition them to a facility like what we're trying to open up? And do you have like a program that they go through with yours, and then after that they can go somewhere? How does your program work?
Yeah, good question. So we are always open to working with other individuals,
Mhm.
other groups. We're usually buying pretty established facilities
Mhm.
wherever we're going, and then building additional services around them.
Mm.
And so what we do is on both sides is we're trying to bring the capital and the resources to make sure that the coverage in that area is above grade.
Mhm.
Right now, like I said, there's some areas that have abysmal coverage. And
Mhm.
so working with a group like you, is definitely not out of the cards.
Mhm.
And then what we do is we bring in our partners or bring in the companies that we've already been investing in and say, hey, how can we do this in the best way?
Mhm.
And so we're not trying to reinvent the wheel here.
Mhm.
There's been people, what I've noticed is there's amazing facilities all over the country with great modalities, great outcomes, great research, but no one knows about them
True. Yep.
because they're kind of small or they're geographically isolated. And for whatever reason, they might not be going to all the conferences. They might not be, big on social media.
Mhm.
They're just really big on helping people.
Correct.
And so that's the people that we're trying to partner with. To say, if you think you have something great going on, try to bring it into the North Star system. And that's where we're trying to shed light. And so we bring resources, we bring, therapists, we bring lots of years of experience doing this. And we're
That's
just
what my
trying to,
question was too. That's what I want to
yeah,
know. Like, if we're going to bring in, say, for instance, an investor or someone interested into getting into this, if they're like, hey, I'm trying to get into the Phoenix market. Now that I heard you guys, I live here. The real estate market is in a decline. Properties are getting cheaper. Would you want to work with someone like you just said? You know the need for Arizona. If someone's like, hey, we want to get into this space, would you all kind of coach them up and be like, hey, we're going to work with you. We'll help fund some of what you're doing if you do exactly this? Is that something that you would do with someone?
yeah, I think that would be open to that
Okay.
because what we have been seeing and have seen for the last 20 years is people seeing this opportunity, jumping in without a ton of experience,
Mhm.
especially without the capital behind them to execute. Or if you're an investor looking to invest into the sector and figuring out where is your capital going to be, getting you a good return and helping a lot of individuals, that's where it's like, hey, let us go work with those groups, either opening other facilities or like yourself saying, oh, I see an opportunity. Let us work with you and say, is there an actual opportunity? For example, there's a group out of LA I mentioned. We don't need to bring any capital to the table. They'll take care of all of that. But we're working right now to make sure that that system is structured in a way that those clients will succeed.
Got it. It's funny though
They
that
don't
we're
want
talking
to, they're
about
not going to
this.
run it. They have no years of experience of running it.
Nothing. That's where you guys come in.
Mhm.
It's funny because obviously InvestSpark Capital, we do lending, and we just over the last 2 weeks I've seen, because I get a lot of emails and I'm up on the market, there's probably 3 other lenders that have rolled out loans strictly for this purpose. I mean, there's a product strictly for this. So anybody that's trying to get into this, reach out to us, go to investparkcapital.com, because there's so many people now that are lenders that are rolling out products strictly for this. And that shows you how big the need is. When you get to the point of where you have lenders rolling out products just for this, there's a huge need, because obviously there's way other things that, you know, lenders can allocate funds toward: fix and flip loans, bridge loans, commercial loans, but something specifically toward, you know, assisted living facilities or halfway houses or whatnot. That's like telling you where the trend is going. So I like it.
Yes, and when those people come to you, if they have any questions or if they need some operational support or capital support, let's talk.
Well, we're definitely talking after this, because that's what we're again, I just mentioned a few minutes ago, that's kind of what we're planning on doing. And I halted because the real estate market has, you know, you've seen what happened in the last 6 or 7, you know, months or so. Obviously the last 2 years, the prices have gone through the moon, but as the last 2 or 3 months, Arizona, Florida, parts of Georgia, the market is starting to turn around. So now prices are going down. Now it's time to get back in, and the demand for what you're talking about or what you guys are doing is going up. So it's like there's a point in the middle where we're trying to meet so we can get into it. So you don't want to, you know, buy a facility and you're overextended because the property's not worth what you paid for it. You know what I mean? It'd be great to chat with you. I might have to bring my partner on because he has a person that has a lot of experience with this. They've done 2 or 3 houses in LA, and now they're trying to go somewhere else. So I'm happy that we set this up. And I didn't know this is exactly what you did. So now I'm like, oh my God, everything happens for a reason, right?
Yeah, too bad we didn't get to this earlier in the interview.
Agreed.
If we want to do another interview, we can do some case studies. We can really open up the war chest.
I think we should. I think this is what we'll do. We'll reconvene. We'll have our conversation. We'll try to get some stuff going, and then we'll talk about what our experiences was like, you know, building one, because I've never done it before. But that's kind of what I saw just doing real estate and doing Airbnbs. I'm over it. Like, I don't want to deal with Airbnbs. I don't want to deal with tenants. I want to deal with what we're talking about, because it's cash flow that you don't have to worry about. I do agree that there might be some red tape, because is this considered a nonprofit or is it profit?
We are a for-profit.
Okay,
We have nonprofit as well.
Okay.
We were a for-profit when we started.
Okay, so there won't be any red tape from an accounting perspective, like when you're doing your taxes. That's kind of one thing that I was worried about. But that's kind of what I want to do. I want to show someone our own experience from working with you and going from zero and not having any experience to getting our first one set up in Arizona. And I think it'd be good to do a case study on that, or just one that you've already done in the markets that you're in.
I love that. It's kind of like the Bitcoin conversation.
Yeah.
Again, when I started hearing bigger pockets talk about storage and RV parks, I feel like we were right at the crest of the wave. You know, Berkshire Hathaway had already been investing a ton of money into that sector. Now, it's not all, there's people that crushed it, but I really feel like if an investor really took this conversation serious and got deep into it, then they would find a lot of success.
Agreed.
I'll use a case study out of Florida. I don't know him individually. I've been told by 3 or 4 people that I should go talk with him. But there was a group that put together 30 mildly small, you know, I don't know the size of their multifamily, 30 or 40, they bundled 30 or 40 multifamily together, just social or sober living. Again, we're doing residential, sober living, outpatient. We're trying to do the whole continuum of care. They just did one vertical, and they sold for, I think, 130 million to a big healthcare system. Because these big healthcare systems, are they going to open up
No.
onesie, twosie houses all around Phoenix metro area?
Nope.
No.
Mm-hmm.
If you go do the work, if you go bundle it up, there are big groups that would love to go and swoop them up.
So then, last question I have for you is, two questions I have. With investors that are listening, is there a minimum that you require for someone to get in? And then are you providing a specific return over a course of time? Or how does that work with someone that's trying to get into an investment space with you?
Yeah, so for unaccredited individuals, we have it as low as 5,000 that they can get into. The preferred return rate is somewhere, I think, between 6 and 8% in that vehicle. And for the accredited individual, their minimum is 100,000, and their returns are somewhere between 7 and 8%. Is what's called a preferred return. Now we expect, and we've performed it out, much higher returns, but that's the minimum threshold the investor should expect.
Okay. And that's over the course of, is there like a lockup period?
Yeah, I think the lockup period is about 1 year, and it's over the course of 7 years.
Okay. So after the first year, if you don't know what that is, the lockup period is the time where you can't take your funds out. After that, if you want to stay in, you can, but for the first year, your funds are locked in. So then, is it quarterly returns or just annual?
Yeah, we're working on quarterly distributions.
Okay.
We really want this to be, as we're building, it kicks off a lot of cash flow, and so we can do a lot of distributions. Some true, we're a real estate fund with a little bit of, private equity business acquisition on top. So we're buying the solid assets underneath. We're having consistent rents come in, and so that generates some good return. And then we also have the business side that's more cash flow heavy, and so we actually get to take the depreciation of the real estate just like normal real estate investing, while you're being able to have that cash flow on top.
So are you all doing the same thing like what we're thinking about doing? We're buying the real estate, we're rehabbing it, and then putting those people in it?
Correct.
Oh, so that's where the return's coming from. Or is it coming from the cash flow and the value of the property going up?
I mean, both, really, on each side. What I see is owning the real estate is separate than running and owning the business.
Correct. Two different.
We just happen to be in the business of doing both.
Okay. So then, okay, I get it. So nonetheless, the return will be there, whether it's through the cash flow of the houses or whether it be through the rehab and the house going up in value, basically.
Yeah, and what I like is you have the secured asset, you have the security of the hard real estate.
Correct.
Underneath, and then you've got the business on top of it.
So it's a safe investment. You're not losing your money because they can just sell the property and pay you back.
Yes.
So then the other thing I would ask, and this will be my last question for sure. You just mentioned this organization. If someone like myself were to put together a portfolio of 30 or 40 of these, do you all have a way to connect a company like us to a buyer who will buy something that large? Or would you all buy something that large if a company created something to that level?
Well, I'll tell you what. We were talking with an investment bank the other day. We're investing through two vehicles, call it 115 million. We might go and do another tranche of capital. This investment bank said, hey, can you take another 100 million to go and execute this strategy? One of the issues in this space is the size of these companies. It's anyone that gets too size does one of two things. They either saying, hey, we went through the hard work of years and years of building this bad boy. Now it's cash flowing. Now we're seeing a lot of success with clients. It's running. Why would I sell it now? And so they're going to try to build and grow to a bigger size and get a bigger exit. And then on the other side, you've got just really, really small, great companies, but it's hard bundling up 100 of those
True.
to do big check sizes. So that's why those bigger mid-market players appreciate someone that has gotten to a certain size.
That makes sense. And it also makes sense for that entrepreneur because it's so hard. Say you get a portfolio of 40 to 50 houses and then they're cash flowing. That's probably going to take you 10 to 15 years, probably.
Yeah.
And right, if you didn't go out and raise any funds from a VC or an angel investor, you did all that sweat equity, you don't want to give it away. You're like, no, I did this by myself and I'm making money. Screw you, right? And then they're going to do it. Like right now we got a portfolio of 75 properties from someone, but she's like 85, right? So now she's going to sell it because she's on her way out. But someone that's like 50 to 60 years old and they're still, vibrant, they're like, no, they're going to keep it. So I get what you're saying. Like, that's so hard for an entrepreneur to let go if they're not, past the stage of where they can't maintain it anymore. So I get what you're saying.
Yeah, if you were to bundle a whole bunch of these up, even if you knew of smaller, sober living or outpatient companies and brought it to us, that would be a great thing for our company.
So anybody listening, what you could do if you want to make some money real fast, go around finding these corporations that might have 3 or 4 homes, right? And see if you can work with them all together, right? And come up with like 20 or 30 and then be like, hey, Jay, guess what?
Yeah, I was on 2 conversations just today about that. I said, hey, go talk to those people you know.
Mm-hmm.
You know a friend or a family, or what was funny is when I started investing in this space, someone would, 8 out of 10 investors would say, oh, I have a buddy who owns a rehab, or I have a buddy who does something in the space, and they make a ton of money. Mm-hmm. I'm like, that could be you. Do you want to go do that?
Yeah.
And what I liked about it, tying it back into meta at the beginning, is you get to have a philanthropic, feel good, you're helping people, you're helping individuals, families, communities, and you're getting a financial return to do that.
Exactly. Your social scorecard will go up.
Yeah. Whereas, we have a portfolio of multifamily. Those are great and, great investments, but they just don't have that extra flair for me.
That makes sense. So then anyone, last tip, anyone that's trying to get into this, what would be your biggest advice for them to get in this starting out? What would you say to them?
I would say go talk to someone who knows, who's been in this industry. Go take someone to breakfast, another owner or someone in this space, and really pick their brain, because you're going to need to love what you're doing here. I just loved this sector. I was on a board of directors, and I was doing other business. We were investing in other companies, other real estate, and I always just went back to it. And for whatever reason, just like yourself, you've gone deep into the psychological, mental space. If you don't ultimately love that part of the business, that is your business.
Correct. Yeah.
And so find a different vertical that you want to go deep on. Like you mentioned, Airbnb. Airbnb does not do anything for me, but I have a good friend who has a huge portfolio and he loves doing that.
That's true. That makes sense. Like, do what you love, because just because you see it on social media and you're like, oh, I can make money from doing this. I thought the same thing. I thought I would love doing Airbnb because I'm in real estate. Worst thing ever. I hated it, right? You know what I mean? So even doing it in Colombia, I hated it. I just hated doing it in period. So do I like helping other people out and being in real estate? Yes. And so being able to do something like what you just said, connecting my love for behavioral psychology with real estate and make money doing both, you don't really got to deal with those people on a regular basis or check out a person every 3 or 4 days or be on a number. It's on autopilot and you're still making the same money, if not more, and you have a greater impact on society doing what we're talking about right now.
Yeah, and I've seen in the industry, there's owners that really get deep with their clients, No,
it's a good point. You build relationships because you want to see those people succeed and you don't want them to tear up your house. That's the thing, right?
Do what you love. You're helping a lot of people. These are more vulnerable than I would say most tenants. And so really make sure that you're willing to put in the time and effort to care for them.
Correct. So then where can anyone, reach out to you? You can give off the website, and then how someone can get in touch with you. You have any social media or whatnot?
Yeah, go to northstarrecovery.care is our website. LinkedIn, Jay Tobey, Instagram at JayTobey18. Talk to Andre as well. Get his contact information. It sounds like we're going to do a lot of great things together.
100%. Be on the lookout for that episode where we dive into the case study of me and him working together and what we're doing in Arizona. And hopefully we can do something in person where we're like a behind the scenes look at, building out assisted living facility or a facility like what we're talking about. Cause I think that'll be cool to have that even documented. So be on the lookout for that case study in our next episode.
Oh, for sure. It's going to be awesome.
All right,
it's going to be a whole YouTube.
For sure. It should be a whole YouTube series. I think that'd be cool.
A whole YouTube series.
I like it. All right, Jay. Well, thank you for coming on, and guys, be on the lookout for that episode. Take care.